We'll jump into some market overview. If anybody's been following me, you know we do use a lot of Bollinger Bands in our trading techniques. So we look for a few things with Bollinger Bands. Trade. We had some trades last night. Let's check on those. So just a heads up, this next portion be a little bit more in depth. We've been eyeing AUD USD. We spoke about the other day about risk on and risk off effects in the market. So AUD and NZD goes bullish, definitely optimistic. You're also going to notice the stock market to be bullish as well. So for some of my people, I see like Miss Sharon has been kind of learning with me for a while. We're going to steady hit. Starting to hitting to recognize risk on and risk off. So we had the virus come in. We got a risk off status, causing the stock market to crumble, to fall. We got investors to step back in, put their money back to work. A lot of optimism in the market, pushed it up. A nice little drop back. Couldn't break this level. Finally break this level. Came back to retest. Now we're at a familiar space in the market. So on our side, we're looking for the market to short. But if you guys notice with XPX, we can look how similar. We can look at these similarities. Guys, see pretty much the same exact chart. And this is going to be because risk on, risk off. So when there's risk on, the dollar goes weak, AUD goes strong, NZD goes strong. So I like to use XPX as a gauge. This is my gauge. Like I say, XPX and the dollar controls the whole Forex market. If you can learn these concepts, you'll be able to move through the charts without having to worry about strategies. Well, you're going to have your own personal strategy, but you'll be able to, let me reword that, you'll be able to create your own personal strategy, being a little bit more informed as far as the flows, the ebb and flows in the market. So as we see XPX, I'm starting the day checking the stock market and I'm checking the dollar index, which is DXY. So I want to see what these two pairs are doing to give me an ideal of strengths and weaknesses in the market. So if I see the XPX is on a huge bullish run, I'm not going to be trying to sell AUD pairs unless I feel there's a rollover coming or there's a reversal. But I won't be trying to sell AUD. I won't be trying to sell NZDs. I wouldn't be trying to buy USD, UCAD, UJ, just based off of what I'm seeing from the stocks. And I know now, like I'm seeing the stock starting to kind of drop. I should have been in this trade. Had a good entry earlier, but I didn't get to take it. But now we're getting a nice candle. We're just 4 minutes into this candle. So if you guys can kind of follow some of my thought process, if I do ever need to slow down, let me know. As soon as I see kind of a structure, I want to check what time. How much time do I have to see if this is going to fill or if this could reject? So let's say we have maybe 3 minutes left in this candle and this candle was full. Well, that kind of gives me an indication to what the next candle can actually give me, depending if I have a candlestick structure, like an engulfing. Maybe I got a pin bar, got some type of structure or pattern from a candlestick. I'm also keeping time. Not to go too in depth, but the look of the market, there's two axes. There's going to be time and price. So when we multiply those two equations or those two factors out, the longer the time, the longer that price stays at that particular area, the longer time, the bigger the breakout will be. So we have something here where price was locked in at this area here. You notice there was a big breakout. The longer the time, it's going to be time versus price, or excuse me, price time over price. Time, can't even get the equation right. Basically, time price times time. I know that's the wrongest way to say it, but we're looking at however long price stays, in this consolidation, the more volatile the breakout will be. So I do see XPX coming down. So I know maybe potentially I may have some sales on AJ. So now that I kind of got my bearings of, okay, I looked at the XPX, I'm seeing potential sales. So that means that, let's pull this up right here. This will give you a more example. That means that risk off potentially could be in the market. So we went over this yesterday about correlations and also risk on and risk off statuses in the market. Kind of gives you guys an advantage to what to expect. So this little chart here gives you Forex correlations, positive and negative correlations, positive correlations with risk off. So we get risk off, the US dollar is what they're going to be called a world reserve currency. Anytime there's any nervousness in the market, trade war, China trade war, coronavirus spiking, war times, you're going to see USD, the greenback, shoot off in strength. You're going to see also the other safe havens like JPY, CHF, SGD take off in strength. That means that these majors are going to go weak. Euro, GBP, AUD, CAD, and then also the emerging markets, which are some exotics that we'll dive in a later class. But so you'll see these currencies go weak, and then the reverse. So we have risk on. Everybody's feeling comfortable. They're feeling like putting their money to work. You're going to get Euro going strong, GBP, AUD, CAD, NZD. So that's what we've been seeing the last few days. So a lot of people, levels are good. You want to kind of identify where you want to enter the market, but this is what really controls the market. So if you ever get a situation where you see like Euro's just going heavily bullish, and you're like, man, it's just tearing through all of my resistance, it's tearing through all my whatever you have, your any kind of indicator, the latest and the greatest, well, you know that it's going to be example that there's a risk on. Investors are feeling, they're feeling like moving their money, they're putting their money to work. So an example is I have Fibonacci. A lot of people love Fibonacci. But if we were trying to base off of Fibonacci, it just teared right through all the Fibo levels, resistance levels. It broke right through. It's because we had a risk on status. So that's why it's important for you guys to kind of start learning that. And then you're gonna hear me say this more and more: risk on, or we have risk off. And then there's ways for us to start identifying these statuses in the market. Like there's a headline right here. TradingView makes it simple because they have economists. Euro AJ may extend losses as growing virus cases sour risk appetite. So you see, I can't make this up. These are the true statuses in the market. Risk appetite, risk on, risk off. Technicals are there. I keep hammering this, saying trading is 90% mental, 10% technicals, and 10% fundamentals. So it's cool and dandy to learn your technicals and learn the latest strategies, how to get in. But what you guys really want to know is information like this. Focus on your mindset and your risk to reward. And that's going to allow you to stay in the game, and you're going to be able to catch the home runs where they're going to pay for any losers that you may get throughout, your trading. Now, so we're kind of just monitoring. That's why I was kind of just going a little bit into a lecture about risk on and risk off because the market's not really moving. We do have a possible entry coming up here. And if you guys, I'll start telling you guys a little bit more about, we call them psychological levels in the market. Coming right up close to a psych level. This is an area in the market where hedge funds and banks like to enter. I see every time they get there, they kind of bounce. So I look at resistance, support and resistance as not a line or a level. I look at it as an actual investor. So there's somebody here that's pressing the button every time we get to this point. He's protecting his position. So it may be somebody that got in around here. They got a nice ride up, but now that the price is coming down, they want to protect that position. Pushes it up. He's still playing this position here, pushing it up. So we are looking for that to get overran and for it to finally be a break. You do see, if you like patterns, you see a possible head and shoulders. Your left shoulder, head, right shoulder. Yet, my goal is to get you guys to start seeing what's behind these candles, what's actually making these candles print. So we have different statuses of where you may have a bear or you may have a bull that came in and ran this market up. So I'm not sure if, let's see how many people we got. Okay, let's say I'm a bull. Does anybody know? And it's okay if you guys don't, but do anybody know what happens? Let's say we're in the market and we put in a buy order. Do you guys know what happens to that buy order when we close it out or take profit?
It reverses back down.
True. Do you know what happened to the initial order though? It does make it reverse. You're thinking right along the right lines. So what happens? I answer that for you. What happens is that buy order now turns into a sell order because they have to sell the buy position to close the profit or close the order. So that's where you can start seeing these reversals or the changes in the statuses of the market. Or this is where you start seeing your pullbacks. Pullbacks are typically a bull that's doing some profit taking. So the bull turns into a bear, drops it down, and then you get the pullback and you get new bulls stepping into the market, trying to take the advantage of the trend, trying to join within the trend. So little foreground and background information about that. You guys will start noticing that nothing trends forever. And you'll start being able to see places. I'll start identifying places in the market where, okay, I see a bull's been running. I do know that he's flipped his order or he's probably taking profit. So let's see what the next status is. He becoming a bear? Is at this point, is he going to become a bear? Because the big boys, they like to play what we call value. They like to buy at a discounted rate, and they like to sell for profit or at a higher rate. Excuse me. So we like to come into with the concept of what I like to call auction market. No problem. And that's why we kind of started today with, kind of some beginner strategies. And as I, kind of get to know you guys a little better, you know me a lot better, we'll be able to build upon and help everybody grow their skill set. So this week, we're kind of flowing through, trying to kind of see where everybody's at. And next week, we'll probably start off with tier 1, which will be more of a beginner. We're going to just look at some, simple yet proven techniques to kind of look at the market. And then we'll kind of build our way up into a tier 2 or tier 3 over the next couple of weeks. We were talking about changes in the market. So you'll start thinking, basically what I'm saying from this, you'll start thinking, okay, if price is so low, why would I want to sell at that price? Or let's say, for instance, if price is so high, they teach us, especially when we're looking at these smaller time frames, they teach us buy the trend. The trend is your friend. My saying is always the trend is your friend until it gets ready to end. So you have to start looking at the market more as, if I'm an investor and the price has already moved up so much, why would I want to buy at such a high point? I don't really want to buy when the market's already high. I'd rather let the market come back to me, drop down, and get a cheaper price. Same on the ladder. If the price is so low, why am I selling so cheap? I want to actually allow the price to go up and then become a seller. So it's small things like that, there's concepts that you don't have to, you look outside of the charts to find it. So anyway, on this, we're waiting for a break here. Thank you. So we're waiting on a break of this level. Once again, it's a psychological level. Round numbers are. So if you guys ever see a round number, just know there's going to be some type of reaction in the market. For this example, the round number is going to be, well, it just played off the round number. If you see here 70 level, every time we get to this 70 level, they're rejecting. 70 level, they're rejecting. So that's the big boys coming in playing those round numbers of psychological levels. So what we want to do is we want to let price, there's a lot of what we call market flow, or there's a lot of order flow at those levels. So we want to give it a little room to kind of get out of the mix of that order flow, moving up and down. So typically it's going to be around 69. I would say about 20 pips, 69.80-ish. I have this range a little tight, but around 69.80 would be a pretty decent level to enter this market, because you'll be clear of these levels. You'll be clear of the round numbers. So around 69.80, you can actually take it on what we call. So got about 15 more minutes here. I will put this recording in a group, but I don't want to go too in depth. But there's multiple forms of how you want to enter the market, just like there's multiple techniques of trading. So there's a method called breakout trading. So people wait for markets to hit a certain level, break through a certain level, and they take the trade and just try to play the momentum. Like here would have been an example. As soon as it broke this red line, you just buy, set your stop according to your risk profile, and you just let it run the breakout. The only downside of this is that you can't get faked out. Price can come up, break out, and then come back down. So a more preferred method is typically the break and a retest. You identify your zones, then you wait for price to break, come back, retest, and you want to see this resistance here holding up, all right, and not breaking above, and then you can typically expect a drop. Now this is textbook trading. You guys get that from everywhere, anywhere in the sun. What I like to point out to people is it goes a lot deeper, because you want to have it's all about probabilities. Because in a perfect world, this is great. This is more preferred than just trying to play breakout. But sometimes the market doesn't even come back and retest, it just drops. Sometimes the market comes back and retest, it'll break down, and then it'll do something like this. Here's your stop. So I like to give you guys a more of a 3D or a robust understanding of trading. Management is key. So based on that, this is a 15, and this is why I don't scalp as much, because this is a 15-minute chart. So that means I'm gonna have to sit here and come back and check maybe every 15, 30 minutes. I'm not active on my chart. I like to teach you guys to come to these higher time frames, because you have more time to let the price work. You may have a bigger stop loss, so you may have to, shorten your your lot size. But generally, I see that whatever you were trying to get with the higher lot size, you end up getting before the week's out by being a little bit more patient. So you see this route with a higher time frame, even an hour to 4 hour, you only have to check it maybe say every 3 hours, every 4 hours. You'll see how the market kind of reacts at these certain points that you already have placed, support and resistance. You can kind of see how the market's moving. And if it's not moving the way you want it to, like for instance, if I would have been impatient or something, I got in, let's say I just took the sell here, I gave it that couple of hours, and say price came back up here and it was probably getting close to my stop. Say my stop was here. Well, now this is where it comes to your personal thought process. I would say, like, based on your sample size, the amount of trades you then took that week, are you taking detailed notes of what you've been doing in the market? Do you have everything written down to know if you're up in the market, if you're down in the market? Can you afford to go ahead and cut this loss? Do you want to go ahead and just cut this off? Maybe it's just 20 pips and you're like, hey, that's fine, 20 pips, because I know personally when I take a trade, it's a 3-to-1. So I can really lose 70% of my trades, win 3, and I still end up in profit at the end of the week. So it's a lot more relaxed of a form of trading. It's a lot more, instead of just trying to feel like I have to be right. Oh, I have to, the market gave me profit. I want to go ahead and hurry up and take my profit before it comes back against me. This method, you're going to be able to, okay, if it hits my stop, that's fine, because I know that I have a system or a strategy in place that's going to win at least 30% of the time. And this allows you just to be more comfortable trading, allow you to let your trades run, because that's one thing we get anxious and we get the fear of missing out, the fear of losing profits, and price could do something. It could come down, pull up. Let's say all the way. Let's just draw it out real quick. So we get nervous. You know, I've been there myself, especially the bigger the lot size, the quicker you are just to take what you can get. So price may drop, come back up against us. And, you know, we say we were $100 in profit here. We look up, we're $50 in profit. And we're like, we're just going to snatch it off the table. And then price comes in and it does this. I don't know how many times that used to happen to me, but hey, it happens. And now you missed out about $300, $400 in the trade. Which in that situation, like I said, there's a lot of mindset that goes along with it. If the profit margins was that big that you felt rushed to take the trade, that means your lot size was too big. You don't want to gamble. That's what we want to get out of the habit of gambling. So this is like we might get a setup and we can take a trade together in a second. We'll see how this pushes. We might get us a trade here. And I'll search and look for a couple more. I'm almost finished with my point. So we look at we just like look at the ease of trading. That's the point I was gonna make. But you have to let your winners run, so they're gonna be able to pay for the profits. So if I'm every time I'm getting in the market, this is just an example. Say I'm putting 30 pips on the line and I want to be looking for 90. Well, I need to make sure that I'm letting those trades progress, whether it comes up and hit my stop or not. I want to let the market, because the market's going to it's going to chop. You're going to get stuck in the ranges, and then you'll get the last push up to hit your target. But if you see this here, this was, what is it, probably about 2 days worth of just chop. So people always say, well, I want that fast money. I don't want to just be in the market holding trades. My response to that is, why not? It's not like you're punching a clock. It's not like you're doing anything extra to allow this to end up paying you at the end of the week. you're actually putting more stress on yourself trying to catch these moves down, moves up, moves down, moves up, moves down, moves up. I mean, me personally, I don't want to have to do that. It's too stressful, too much. We do this as a means to an end, not to have to start another full-time job. But we're getting a nice candle, and then here comes that's a formation, a candlestick formation that's giving us a indication to buy. I mean, I say buy, sell. So you have an engulfing here. We look at the time; it's 5 minutes in this candle, so it looks like this candle is going to complete and be full. Now we want to jump into a smaller time frame and see what's happening right now. That previous wick is completing. So we could play this as a breakout. I think we'll be safe to do that. We have the completion of the head and shoulders. Once again, we go back to different statuses in the market. You can be a aggressive trader. Well, we already have a trend line break here, so it's not necessarily as aggressive, but we haven't broke this level. So an aggressive entry will be this next candle. We'll give it a few minutes to let this candle make up its mind. We'll take the sell. Or if you want to be more conservative, you can wait for what we call a neckline break. So we want to break the neck. We're going to break the neck. We can even wait for, even more conservative, wait for the pullback and then drop it down. So conservative is giving you more, I wouldn't say higher probability because the market is random, but it's kind of a buzzword people like to use. I'm more of an aggressive trader. I seem to find tighter stops and I seem to get better entries. So I'm already in this trade actually. Yet, all the confirmations I have, it could pull back up against me, but at this point I'm already in profit. So all I simply do is I protect the castle. I move my stop down. Instead of being 30, 40 pips, now I'm going to be about 20 pips. So that's cutting my risk. That's giving me, more room for my sample size. So we got about 3 more minutes. I'm going to hit this last couple of things here. These are things I call outside of the charts. This is where the win is going to be done. Not here. This is simple. Everybody can get this with time and just watching how the market flow. You get used to these flows, learning risk on, risk off. This is where you're going to win your trade and starting to see your account grow. Not per se this journal, but statistics, probability. See, I got 2 different trading plans here. My trading plan is always smarter than me. We talked about it last night about confirmations is key. So simple strategy, keep it simple. How do I get in? How much do I risk? How do I get out? When I went through that last trade at AJ, I have about 5 or 6 different reasons to get in. I want to see at least 3 or 4 of those checked off, and that's going to be a high probability trade for me. So I had support and resistance. I had trend line. We looked at, correlating pairs for confluence. I did peep at a couple of indicators, and we also use, currency strength, which is, seeing the risk on, risk off of the ADI, being weak. I'll give you guys another quick example of currency strength. We look at this chart here. There's an indicator here, the currency strength meter, showing that, ADI's weak, JPY is stronger. For now, another quick example of a currency strength meter. Bam, we have this one right here. ADI's going weak. JPY starting to bend up. We typically want to see these cross. When they cross, that's a good entry point. So we're using a couple different techniques. So after I have that checked in, another important part, risk. And then also what people don't talk about, everybody says the entry. No one talks about the exit. Where do I want to get out? Am I going to allow it to hit my, and this is where trading becomes an art. It's more like a balancing or a dancing act. More like I always equate it to like boxing. You got to fill out the market. You know, they're throwing combos at you. You got to bob and weave. Um, what is it, Muhammad? Float like a butterfly, sting like a bee. So nothing is really. A lot of people have not a hard time until we really dive into trading. My concept seemed a little odd because when we stick in trading, we get suckered into a lot of the marketing things like that, and we're looking for just a point A to point Z. You know, 1, 2, 3. I do this, this, and this, and I instantly I don't have to. I'm a profitable trader. Unfortunately, sorry to be the bearer of what I would say is good news, but it's not like that. It's going to be, you may get a sequence of 1, 3, 2. It may be, you know, instead of ABC, it may be AZY. But the thing about it is that you're able to learn how to flow and you start making reads to where, as long as you have this trading plan, it's going to keep all your emotions at bay. It's going to give you a rule base that's going to give you structure to say, like, for instance, we're already in a trade. I don't want no more than 7 trades running. I'm a scale out. So if my trade, I have a bigger lot size, like say a half a standard lot, and I'm getting close and my target is getting hit, but I see a lot of momentum, I may just take off partial or close like a 0.20 and let the rest ride. So this is going into, like, it becomes a delicate dance with the market in order to stretch out as much profit as we can and recruit and decrease our downside risk. So it's 8:02 there. I'll leave it there. I'll open the room if anybody has any questions. We went over a few different topics. They went over some different indicators. I mean, strategies, flows in the market, risk on, risk off. You see this trade here is progressing. But you guys got the floor if you got anything, any questions, any concerns. Check the chat. I've been holding gold for 2 days. See, that's what I mean, my man. What are you trying to sell it, or are you? When I tell you what, Clayton, keep coming into the classes when you see me throw them in there, because I can show you how to get a little clarity of gold, because gold moves on risk off, and risk on as well. So if we see big events, I'm sure somebody has some input, but go feel free to speak away while I pull this up. Um,
Gotcha. I looked like I should. I was just trying something, but it looked like I should have been in a buy, and I did the sale, but it's been real rocky, and I don't wanna cut my losses. How do you say it? Cut my losses yet, because I think it may turn around. So I'm just trying to stay there and hold it for me.
yeah, indeed, I've been seeing some. I've been looking for gold to kind of probably sell off a little bit too. Um, the example I was gonna give you is we start noticing, like, you may see me in the back, not the back office, but our group. You'll see me be posting information about this coronavirus. So we see like heavy spikes in corona. Um, Sometimes gold will break up, but for now everything's been calm. I mean, I think you're good with that sale. Though. Now,
Okay.
let me look at it real quick. We'll close the call out. Let's see. You got a good area, at least to push
Gold,
some type of
gold
profit.
is driving me up a wall. I've been holding that gold forever, waiting on that sell.
Yeah, a lot of people waiting on that sale. It's just a lot of choppiness. We got a range here. I can't see because I'm currently short EU as well, so I can't see it coming down, at least hitting these 93s. If we break here, that'll be a real nice drop. So what I would do is, you start getting your fall, just kind of protect your profits, bring the stop down, of course. try to get it to break even. Not too soon though. I mean, you've been patient already, so let it pay you out. I think you're gonna be good. Let me look at one more thing.
And then real quick, I actually had my stop loss at first at 1820, just a flat 1820, and then it looked like he was about to hit the 1820, so I actually took my stop loss up because I didn't want to come out of the trade.
Yeah, let it say. So sometimes that's good, man, but that I understand completely depending on just what's your account size and things like that. But start doing the opposite way. Like don't get in the habit because that'll bite you in the end of moving your
Okay.
stop. You more want to try to move it. You want to protect your downside, man. So of
Okay.
course,
Yeah.
certain instances it's gonna work though. Like if you eye it right there and you like, man, this is my only trade. I want to go ahead and protect that or see if it's gonna run. I'm pretty sold. Yeah, you can do that. Just don't get in the habit, man, because I done had that burn me a lot.
Okay. Got you.
Oh, so yeah. You look good though. Yeah, I mean, you got an engulfing right here last hour, so I see that pretty much that potential for that to keep pushing.
And see, that's what I was looking at, that engulfing, because I think you told me that when you see the engulfing, normally it's either if it was going up nines and a ten, well, it's the potential to go down if you see it. So I was, like I said, this was one that I was playing with on my own, and I really didn't. It may sound crazy, I don't want to lose, but I didn't care if I lost because I was trying to watch it to see how it goes, if that makes sense.
Plenty, man. You actually as wise. I always tell everybody it's your first, $100, $200. Just try to get as many trades as you can to get the experience. Don't
Gotcha.
expect to make a million, So you're doing it right.
Okay, appreciate it. Man, just trying to follow what you teach. So I appreciate that.
Indeed. We did go over too. I put the recording. We went over the Bollinger Band strategy, so that'll help you out too. Like with
Okay,
Bollinger Band,
when did you put that up? Because
I'm gonna drop it in the chat as soon as it finish converting.
okay, thank you so much.
Yeah, indeed. Well, all right, everybody. I appreciate y'all joining us, man. We'll do it again tomorrow.
Thank you for your time.
Yeah, y'all have a good day. Yours as well.
Thank you. You too.